The Insurance Institute of London is today publishing this new study of the cyber insurance market. This book has been written for insurance professionals and other interested parties as a guide to both cyber risk and cyber insurance. Cyber insurance research findings is available in hardback and as a PDF. I'm Yvette Eston, Head of Content and Communications for CyberCube, which has sponsored this new study. I'm joined by the study lead for the book and other authors and editors who will tell us about the contents and how it aims to have and be a comprehensive publication for anyone wanting to gain an insight into cyber risk and how it is approached in the insurance and reinsurance market. Before we delve into the detail, Rebecca Bowl, Head of Industry Engagement for CyberCube, will tell us about why this publication is so fundamental, as both the threat and the insurance market's response to cyber will continue to change.
Thanks for that introduction, Yvette. It's been a pleasure to work with the Insurance Institute of London and other contributors in the reinsurance market on this insightful publication. Cyber insurance is one of the fastest moving segments of our industry, and it's not easy to keep abreast of the latest developments in the threat landscape and in insurance coverage. CyberCube is committed to educating the industry, and that's why sponsoring this book and supporting its distribution is important to us. Allow me to briefly introduce CyberCube. Our mission is to create the world's leading data and analytics to quantify cyber risk. We currently serve the commercial P&C insurance industry and their clients by enabling better decisions about the most important new risks facing society today, providing confidence for businesses to take risks with new technologies, and allowing insurers to create products that share the downside when technologies fail. CyberCube is a venture-backed software-as-a-service technology company, launched in 2018 out of cybersecurity firm Symantec. To date, we have invested over $100 million in cyber risk quantification in the insurance sector. We are a trusted partner to the insurance industry. We partner with over 2/3 of the global cyber reinsurance market by premium and over half of the top 50 global insurance brokers. We serve some of the largest businesses across the insurance value chain, from top-tier carriers, reinsurers, and reinsurance brokers. We also work with industry associations and supervisory bodies to help inform their governance framework, developing stress tests and realistic disaster scenarios for their jurisdictions. More information about what we do can be found at www.cybercube.com. Handing back over to you, Yvette.
Thanks very much for that overview, Rebecca. I'm now going to spend some time with Neil Park in the studio. He's the study lead for the book. And Peter Wedge, editor of the book, is joining us remotely to tell us about the book contents. Starting with you, Neil, thanks for joining me. Can you tell me a little bit about the Insurance Institute of London and a little bit about its purpose with regards to education?
Okay, well, the Insurance Institute of London, part of the CII, is a membership body, and obviously its role is to improve the professionalism of the industry, and key role of that is obviously education. Sometimes they do webinars, they do lectures, and occasionally do these research studies, which result in a book.
And let's talk about that book and those research studies. Why did you feel it was important to publish a cyber book now?
Well, Alison Potts of the Insurance Institute of London approached me a couple of years ago and said, we've got no book on cyber risk. And actually I went to the library at the time, and there was a book on e-commerce risk, 2009, but it didn't mention the word cyber at all. It shows how new the term is. And so we said, yeah, we need the market's grown massively. We need a book on cyber risk. We need to kind of put down the current position of the cyber insurance market as we see it now.
Now, this book was actually put together during COVID. I'm going to ask Peter. Peter, can you tell me a little bit about how easy it was to put together a book such as this during the global pandemic?
Yeah, I mean, putting the book together is never easy. And I think it didn't help with the pandemic, but at the same time, I guess you had a lot of people staying at home and not going out. But at the end of the day, I think we did a good job, and we managed to be consistent over the whole book. And at the end, that's probably why you're sponsoring it. I think we've got a good technical level of the book. It's very, very good.
Now, can you tell me a little bit about the structure, Peter, of the book? How is the book structured?
I think it's very comprehensive. So basically, we've got part one is about the exposure. We then look at the coverage. We then go into depth about the quantification, which is very, very difficult, of course. And then the pre and post-loss risk management. So I think all in all, it's a very comprehensive structure.
You mentioned the word comprehensive. We're now going to move into a presentation outlining the different sections of the book and some of the key findings. Now, joining me in the studio to help talk about that book is Peter Hawley. He's Director of Insurance Solutions International for Security Scorecard. Also joining remotely is Visesh Gosrani. He is the chair of the Institute of Actuaries Cyber Risk Working Party. Now, for everybody on this call today, thank you for your time. There will be an opportunity to ask questions about the book and some of its findings, so please do send them in through the question box. Turning to you, Neil, and the presentation.
Thank you. So it's a lightning overview of what's in the book. So as Peter just described, the sections of the book are the 4 sections of the book, and I'm going to talk through the first section, the exposure piece, and then Peter will talk through the coverage, Visesh will talk about the quantification, and Peter Hawley will talk about the risk management section. So just to give you a view of the part 1 of the exposure, and really I think we didn't discuss it, did we, Yvette? But really, I'm not saying this is a cracking read, you're going to read from start to finish. It's a sort of book that you can dip in and out of to get what you need from it. But this is the structure. So we start with the exposure. And Yvette and Rebecca, who you've just seen, wrote the first chapter. And it's an excellent sort of scene setter, not only to this part of the book, but to the whole of the book, really. And these are some of the key themes of which they cover when they're talking about what is cyber risk. So they give a brief history. They give an overview of some of the attacks, and they have a really interesting discussion about how the fact that digital technologies and cyber allow us great opportunities as a society, but also bring risks with it. They talk about the key attributes of cyber risk, which are really important later on, such as dynamic, it's systemic, of course, how the government respond, and talk about some key definitions. So a really useful chapter for those of you who are new to the cyber insurance industry, or maybe work in another part of the market and just want to get into it. So that's chapter 1. And then in chapter 2, Ivy, who was working for Lloyd's Syndicate when all this started, but now works for Deloitte Global as a cyber risk analyst, takes it a bit further, and she looks at cyber and technology risk in a bit more broadly. And she's saying, well, what are the key cyber threats and how will they evolve? You know, since Ivy started writing the chapter, ransomware, which used to be all about encryption, and the ransoms were quite low. Now the ransoms are higher, and it's not just a threat of encryption, there's a threat of exfiltration as well. So they're always evolving. And Ivy does an excellent job of giving an overview, as well as diving in a bit more deeply about what the threats are, going through all the threats, ransomware, advanced persistent threats, talking about the threat actors. And what I really like about it as a insurance person rather than a technology person is she gives a few case studies which describe exactly how the attacks are carried out, which helps me, and I'm sure lots of you who kind of sometimes get confused by the cybersecurity terms. And again, she looks forward a bit, what the new and evolving threats, because cyber risk continues to change. And then the third chapter, which is Peter Wedge's least favourite chapter as the editor, possibly because I was one of the authors with Tony Gregory of Insurance Market Conferences, and I was a broker. And I know that as a commercial broker, what your customers want to know is, what losses can this exposure cause my organisation, and am I insured for it? And as a broker, I need to know, are my customers insured for these losses, and what policies do I need to arrange for them to provide that protection? So that was the key theme of this book. And Tony and I both train brokers, often from outside of the cyber market, and they often get confused about all the cyber terms. Sometimes they get confused about the wordings because they're all a bit different, data loss, data reconstruction, etc. So what we tried to do here was introduce some sort of standard language. And the Cambridge Centre of Risk Studies had produced this risk schema where they identified 19 cyber loss events. So what we do in this chapter is we go through all 19 loss events and try to bring them alive. We give some claim examples. Tony's put in some case law, talks about the data protection legislation, how data privacy law affects the exposure. And then we do what really is impossible to do without the risk and the various wordings, but we go through them and say, well, what policy would cover which loss? And sometimes it's a cyber policy, but sometimes maybe the directors are being sued because they've had a data breach and it's going to be a D&O claim, or is it? So an excellent chapter for brokers who are really wanting to make sure that their customers have the right coverage. But of course, we're going to go into more detail in the coverage in the second part of the book. And Peter's going to talk you through the coverage and silent cyber and reinsurance. So, Peter.
Yes, thank you very much, Neil. So, as we said, this next chapter is about coverage within a typical cyber policy. I mean, the first thing to note is there's no real standard when it comes to cyber policies, and the language is still developing. So I think it's fair to say at the present time, you have this kind of epidemic, pandemic of ransomware losses, and certain companies are looking at that and thinking, can they basically restrict some of the coverage in order to avoid some of these losses? That's one way to do it. But then again, you have to make the policy attractive. That's the problem. So basically, what does a cyber policy cover? These are essentially the outlying elements of it. So you've got what are the common features, even though it's not standard. A very important thing to understand is this first party versus third party coverage. So let's say you have a property insurance that essentially covers the policyholder against losses which he or she, that entity particularly has. That's first party. And then you have maybe a liability policy, and that covers basically your liability to third parties. In the cyber world, you have this strange kind of policy which covers both things. So if you look at something like data breach, for example, you have certain elements which are going to affect you as a policyholder. And then on the third party side, if you lose the data or particular data subjects, you're going to be liable to them as well, of course. We then look at malicious versus non-malicious. So let's say you're something like a state actor, then maybe you're just trying to basically cause disruption, versus a non-malicious where you've got an employee accidentally making a mistake at work, but basically shuts down the power plant. It has a similar effect, but it's the intention within inside the person's head. You've got the policy triggers there, and then we look at some common exclusions. So here, put together a quick overview. So it depends on the particular product, as we said. So basically, there's a huge competition between the various cyber insurers. There's more than 200 cyber insurers. It's actually dominated by the US. Sort of 70% of the premium is in the US. So that's really the first place to look. But of course, it's also expanding outside of the US. So you've got the first party cover, and then you've got a smaller element, which is the third party cover. Doesn't mean that there's less exposure there. And the quantification of that, of course, is Vishesh is going to tell us how we do that. These exclusions are important. So war, bodily injury, property damage, and especially at the moment, that exclusion for war. Yeah, what are we actually excluding? Is it just physical war, traditional war with tanks, or is it also cyber war? The next chapter is about cyber risks under non-cyber traditional policies, what we call affirmative and non-affirmative coverage. So let's say you take out, like Merce did, a property insurance policy, and then there's a cyber attack. Can you claim under your property insurance policy for a cyber attack? Yeah? That's the question which really arises. And then if you're the insurer, then you can say, well, what about the war exclusion? Is this particular type of act, because it was from a nation state, is that actually excluded because we can call that a war? So these are the type of questions. So essentially it's, will other non-cyber policies pay cyber losses? The answer often is yes, only because it was never thought of before. So the coverage is very broad. There's no specific exclusion, and you can basically squeeze a cyber loss, so to speak, within the broad coverage. In recent years, we've seen basically, especially Lloyd's and then other markets, start to introduce exclusions and also affirmative cover in order to say, is silent cyber, is that covered? Yes or no? Just to make it very, very clear. These are some of the cyber attacks, and this is basically the key themes of this particular chapter. What is silent cyber? The regulatory context, because essentially, especially the regulator in the UK was saying that the insurers need to get a grip on the exposure, and they need to basically either say it's covered or it's not covered. And then we look at the different exclusions. We've gone into a lot of detail on that. Okay, the next chapter was mine. That's reinsurance. So you look at it from a slightly different angle. How is the reinsurance market responding to the opportunities and the threats of cyber risk? One important thing to bear in mind is approximately 50% of the exposure is actually transferred to reinsurers. And the reinsurers, basically about the top 5, they write something like 65% of the exposure. So it's a very, very sort of market which is dominated by a few reinsurers. And at the same time, the insurance market is heavily reliant on the reinsurers. So these are some of the themes that we look at. What are the reinsurers' attitude to cyber risk? What kind of challenges do they face? The biggest question always, if you're board of directors, let's say, at Swiss Re or Munich Re, you're going to say, what about the accumulation risk? Can we actually control the accumulation risk? And that's why we have people like Visesh just to tell us basically how we quantify these things. And then we think about which steps can we take in order to get that accumulation risk under control, essentially. So without any further ado, I'll pass over to Visesh for the quantification part.
Thank you, Peter. As a working party, as the Institute of Actuaries Cyber Risk Working Party, we had the opportunity to write this section of the book, which covers the initial measurement of the risk and then how to price it. And then once you've actually written those policies, really how to understand the accumulations that might arise within those policies. So on to the first chapter within that, the quantification of cyber risk is what we were trying to understand and convey within this chapter. And this was written by both myself and Dr. Acharya from Glasgow, Caledonian. We went through a journey, we'll take you through a journey when you read the chapter, of understanding that all companies are really exposed to cyber risk. And within that, we actually talk about why different companies are exposed to cyber risk and how two companies that look quite similar might actually be exposed to different levels of cyber risk. And that's from both their susceptibility to an attack and as well as their attractiveness to somebody who wants to cause a cyber event. We then talk about how to capture the data that helps you to understand and quantify the cyber risk. And within that, we then progress to actually, what does good look like from an IT security perspective? We go through quite some detail in terms of that to really make sure that you have a full understanding. We then talk about historical events because they matter. Many companies have been impacted by historical events. And what we try to get across with this is why historical events don't always mean that you shouldn't provide cyber insurance. There are different ways to think about the history and what it means. So the key themes are the different types of threat actors out there that can make a different company susceptible to a different type of event and a different type of bad actor that might want to impact them. That we then continue on to attractiveness of those companies to the bad actors, and end up with a section on how to quantify all this data into actual probabilities and severities of events that will occur. In chapter 8, we talk about how you actually price this risk, and this is given the evolving nature of the risk and the paucity of data available. And this has been written by two pricing actuaries, Carly Hodgson from Axis and Harry Robinson at MS Amlin. They've gone into really sort of talking about the sophistication of cyber pricing as it stands today. And, spoiler for the book, it's not heavily sophisticated, but the point is that they explain where it stands relative to other areas of pricing and why it's not necessarily so sophisticated and why that's okay. They then talk about the types of techniques that are used, and I'll come on to that on the next slide, but also go further into depth about that data, that's used to underwrite and price, and how you obtain that data, because there are a number of different ways to obtain that data, and also to validate data that you're provided with as well. The book then continues on to thinking about silent cyber and how you apply those principles there.
Going way.
We then, if you look over to the right, this talks more about the different types of pricing techniques that are in use across all lines of business. We then talk specifically about how those pricing techniques are affected by cyber risk. We then come back and actually talk more specifically about the different types of risks in cyber and how you apply this to each of those. From this chapter, you should really walk away with an overall understanding of the type of data that you collect, which builds upon what's in chapter 7, and how you then turn that into a price. And for chapter 9, the last section of our book, Simon, Jasvir and Anna put on their tin hats and run around like Chicken Little, saying that the end of the world is nigh. Well, not quite, but the point is accumulation is important, and that's recognized. But they actually go into further detail about how cyber risk does accumulate and what the relevant stakeholders have been thinking about in terms of cyber risk, and there's a really good summary there of the thinking that's been brought out to date, and where the different stakeholders are necessarily pointing. We then go into further detail about how you can actually estimate accumulation risk and then monitor it going forward. And so just to finish off this section of the book, for accumulation, we really focus on what those areas of accumulation are, but also the fact that it's not a one-stop, with the few that are at the top. There is the potential for more, and the more might matter depending on the type of portfolio you've got. And then in terms of the measurement of those portfolios, there are different ways to measure them. And, from the simplest scenarios, which are very deterministic, right through to full stochastic event set. But the focus that you need to have is what's the right bang for your buck, and how are you going to monitor this portfolio over time? It may be the case that more than one of these methods is appropriate to you for different types of use cases. Again, you really should walk away from this book understanding that once you've written a decent cyber portfolio, understanding, monitoring and managing the accumulation is really important. I'm now going to hand over to Peter Hawley, who is back in the studio and is going to talk about pre- and post-loss mitigation.
Thank you. So good afternoon, everybody. I'm just going to talk through a little bit about the section around pre- and post-loss risk management, as you can see there. Just to give you a brief background, with my most of my insurance career having been in the claims side of things, this is how I became involved with the textbook, and then my move into cyber sort of aligned with that, and ended up working with Neil and the team to bring this to the market with hopefully a lot of use for everybody. The first chapter is written by our friend Ed Hawker from Cyber Risk Specialists, focusing on the cybersecurity angle and basically what are the key elements of cybersecurity. Key themes, as you can see, it starts with a cybersecurity market overview. So that's looking at the size of the market, how it's growing. In reality, in the next 5 years, we're expecting it to double in size to around $280 billion. And then he also goes on to speak around different areas of quantification and an understanding of how security is being approached from the various angles, from the security standpoint, but also how that interacts with the insurance and risk transfer process. Moving on from there, it's the cybersecurity core concepts are covered. So this is about holistic approach to things, such as getting the board involved, as well as that whole risk transfer conversation with risk management professionals. And then a bit on the threat intelligence side of things. So this is getting into the weeds of where those who are frontline in cybersecurity are looking into different areas, such as the hacker forums, using OSINT processes and various other technologies and capabilities available to them that builds up the picture of what the true threat is to everybody in the world these days, but of course from the insurance perspective, our customers who are front and centre for all of us. Industry sector considerations is an important part of the chapter, because of course cyber risk means different things to different people, different revenue sectors, and then through to which industry sector they're in, be they more a first-party risk kind of approach, a third-party risk, or somewhere in between. For example, a company that manufactures clothing and but also then distributes it through a retail chain will have that hybrid of both first and third-party vectors to be considerate of. So that's covered in that section. The conversation points between the underwriters and the brokers, this is obviously a key thing for everybody operating in the market. This is particularly in the last few years of the market correction, as I think we're calling it appropriately these days. This is important to allow that understanding of where the two parts of the risk transfer chain are coming at it from, to make sure that the best coverage is available at the most appropriate pricing for the risks that we're seeing coming into the market. And again, with a lot of that sort of correction over the past couple of years, this is now sort of a key time to make sure that everyone is working together, and this section really works with that. And the final section of this chapter is the key and emerging challenges. So this is looking forward of where we're going to go from here, a little bit of forward shooting and what is likely to need at a high level, just some thought for everybody in the market going forward. Next chapter, management of claims and forensics. So this was myself, who was part of the team who built this up, together with my friends Phil Tansley from Shoesmiths law firm and Ollie Whitehouse from the NCC group, adding some really good detail from what's being seen from both the known and the unknown, and the reported and the unreported side of the claims and forensic side of the business. Big question, of course, is how can we help our customers in the event of cyber loss? I've always perceived and considered a cyber insurance policy really being one of talking to that service that the client is expecting when the unfortunate occurs. Traditional policies in the P&C market, again, as we know, there are loss adjusters there to help out with the quantification of the damage, and there's the police or the fire brigade or whatever you need for the ambulance services to deal with all of the issues that go from a traditional P&C position. In cyber, those services weren't so straightforward available. So this really does talk to what is available and the different approaches that can be taken. So the insurer loss response is the first section. This is where we talk about how insurers are dealing with those matters when they come in, and how they approach the issues up front at underwriting stage, but of course when the claims or the incidents occur, and how the best support can be provided. We then move on to what has been something that's seen a lot of change in the last 5 to 6 years, which is the differences between a lawyer-led response option up against a technical-led response option. The lawyer-led option is the traditional approach that was first pioneered in the United States, where the market is significantly more evolved and advanced, but that was principally because the main threat was seen as being from a data breach, and therefore the lawyers were perfectly positioned to act as the managers of the incident, to work from that angle and protect the insureds from the litigation that's likely to follow on from. The technical-led option talks much more to the, excuse me, the perhaps more European approach, which has been cyber insurance for a business interruption purpose above everything else, and it talks through the different phases of that and how that would ultimately work. Effective incident response then talks about the different variations of how that would be used and complemented with each other. And the US versus non-US practice differences is useful from the perspective of course, our insureds are often not just in one domicile, they're often operating in various jurisdictions, and even if they're not, potentially the people impacted are, because as we know, as a EU citizen, it doesn't matter where you are in the world, your GDPR rights are maintained. We finish up with some case studies. Always great to get some war stories. They are the bit that adds colour to often what is the black and white of the policy paperwork, and that's where that particular chapter then closes out. final chapter I'm just going to talk to you about today was written by my friend Ben Hobby of Baker Tilly and deals with business interruption in the cyber realm. Ben's very respected in the market for his knowledge in this area, and really his chapter really nails down on the question of how this is calculated within an insurance policy. He uses a lot of things that are traditional in the business interruption calculation process, and that approach from a cyber angle is then used both explaining from a calculation of loss from a gross profit perspective or a net profit perspective. But he then goes through and walks through in very nice, clear detail how these calculations are explained and worked out, and therefore gives a great insight into what can be expected from a business interruption forensic adjustment as the process goes through. Very useful to underwriters to obviously understand what's going to happen when the claims come in, but very useful, of course, to brokers to be able to explain to clients really what's going to be seen there. He continues walking through with the matrix of the claim, which is the splitting out the various sections, and then the key elements to consider when adjusting a business interruption loss. And that concludes with the impact of physical damage exclusion on business interruption losses, which takes, of course, the natural point of a lot of, or the vast majority of cyber insurance policies excluding physical damage. But of course, there is the increased costs of working and those kinds of elements that are aligned sometimes with still putting back in place the insured where they were before. But if that's linked to the physical damage, what Ben does is considers those areas in there and how that all plays out. And ultimately, fully intended to give that visibility to everybody who needs to operate in this space, as to then how convey that to, as I say, the customers who at the end of the day are the most important part and want that confidence around what they're buying. Just to finish very briefly, there is a glossary at the end, very useful, of course, for anybody new or not so new to the the cyber insurance market, that Peter's put together and works very well, just highlighting all those points. And then with that, Yvette, it's back over to you.
Great, thank you very much everybody for summarising the book and some of the things that we're finding in the book and looking forward to. This is a session for you on the call, so if you're watching this, please do send questions through, and I can see that many of you are sending questions through at the moment, so please keep continuing to do so. We did run a number of polls so far on this webinar. I'll give you the results now. And then we move on. But first of all, let's talk about who is on this call. So out of you who've responded, you have got 25% who are working directly in cyber insurance, and 75% of you on this call are working in a different part of the market. Let's look at that in terms of a breakdown. 28% are underwriters, 49%, so nearly half are brokers. We've got 11% of reinsurers, and then loss adjusters and cybersecurity specialists are 5% each, and software consultant making up the remaining 1%. While we're delving into details on those polls, I'd really like to talk to our panelists here a little bit more about that book and what each of you would like people to take away from it. So if they're buying this book or accessing it online and purchasing it online, what would you like them to learn from it or take away from it? Can I start with you, Neil?
Well, whatever they need to take away from it. You're talking to a lot of brokers on the call, so as a broker you need to know what this exposure is and what losses can it cause my customers, and what advice can I give my customers on how they can manage that risk or insure that risk. So you know, some of the coverage chapters are really important. Dip into those. If you're an underwriter, then, you know, coverage might be interesting. If you're a non-cyber underwriter, and there's a lot of people from outside the cyber market there, well, you might want to understand what the cyber insurance policy covers, but also reflect on what your policy might accidentally or deliberately cover in respect of cyber risk. And then I think for an underwriter, the pricing chapters and the accumulation chapters are really good too, and I don't think the market's quite figured out yet exactly how to price cyber risk in the absence of a lot of claims data. We've got a bit more now, and accumulation is always going to be a struggle, and Visesh gave an overview of where we are, and so the underwriters and actuaries working together can take that away.
Visesh, you were just mentioned there, perhaps you could tell us a little bit about what you would like people to take away from this book.
Yes, and it almost doesn't matter whether you've been involved in cyber risk already and have started to use some of these techniques, or whether you're new. The point is that there's a discussion of the different types of techniques that can be used, and it's as a result useful to both enter the market as much as it is to really understand what's going on in the rest of the market and how your current methodologies might actually compare. So I think it's got a wide range. We've also touched in the accumulation chapter on the fact that reinsurers can really benefit from thinking about that accumulation, given that they have access to even less data than their end clients do.
Great, thanks, Visesh. So going back into the studio here, Peter, what would you like people to learn from this book?
I think it's mainly the demystification of cyber risk. I think it's sort of clouded in even more of the dark arts than we tend to do in the insurance industry. And I don't think it needs to be the case. I heard somebody recently refer to the insurance industry liking to use the keep it simple, stupid mantra a lot. And I think that is true. We do as an industry like that. And I don't think that's a bad thing. And I think that this demystification is definitely what this textbook can do. It does sort of align to a lot of areas that, again, with the point that a lot of the people on this who are watching today are not currently active directly in the cyber insurance market. There is the move to PC&C, property, casualty and cyber. It has been discussed a lot in the past, and I think that is definitely happening. And utilising a lot of that groundwork that people have from other areas, the textbook will help augment that and really push people forward to be able to say, actually, this isn't just all lots about zeros and ones and the usual pictures of people wearing hoodies, having their own laptops in darkened rooms for no apparent reason, why they can't afford their electricity bill if they're running a laptop to turn a light on. I've never quite understood with that picture, but it's just about getting that comfort around things. It's not that scary a thing, and I think that's what this textbook is great at doing, showing people that if you're in the market, you can definitely go into cyber. And
Peter, on our Zoom link there, can you tell us what you would like people to learn from this?
I think for me, I mean, Peter's hit the nail on the head, really. But the fact is that even at the board level, there's a lot of misunderstanding of cyber. People are scared of it. And they think, even they say sometimes publicly, can you insure cyber? Is it possible? I think this book has proven that you can break it down. Of course, it's not 100% that you can say, yes, we're going to have this many losses in this particular area over this particular time. But it's the same as insuring a hurricane. It's exactly the same thing. You have a model, you've got your pricing, and basically then you react to the claim events. But it's not impossible, but it is complex. And we've got people like Visesh and all the others to help us, right? So basically, it's within your limits to do it. I think this book proves that point and goes into a lot of detail. So I think it's useful for many, many people. I mean, of course, it's a very long book, and the question always arises, are you going to read it cover to cover? I mean, most people won't do that, right? You're just going to dip in and out, probably. I mean, I'm not sure if Neil wants to add to that point at all.
Great, thank you. And there are lots of questions coming through. Do please send them. There's one here, actually, specifically, is this book relevant to both claims adjusters and underwriters? Neil, do you want to take that question?
Yeah, as I say, I think there are certain chapters which are more relevant to certain people in the market than the others. I mean, obviously, the claims adjusters chapter, what Peter was talking about, the claims and forensic, the business interruption chapter are really interesting, but also they need to look at the coverage chapter as well. And maybe the silent cyber chapter is important too. If you're an underwriter, I said chapter 3 was more for the brokers in the sense that it helps the brokers understand what losses are and where they're covered, and then the coverage chapter helps the brokers. But the underwriters kind of need, I know, dealing as a training consultant in the market, and Peter's alluded to already, we have cyber people and we have non-cyber people. And going forward, things are going to be full of software and hardware. The risk is just going to be together. So we need underwriters to understand the cyber risk, even if they're not a cyber. So looking at cyber security, if you're a non-cyber underwriter, look at the cyber security section, because the things in the future are going to be products with software in, and we need to understand how they're secure, because they're the physical things we're going to insure.
Great. Another fantastic question here is, as with all non-fiction books, when a book is published, it's already out of date. Do you intend to issue supplement updates, or will a revised edition be published at a later date? So I don't know who wants to take that question, Neil, if you want to start with that one, and then maybe go into Peter.
Yes, I mean, all non-fiction books get out of date. That's just the way it is. And I know when I started, Alison said they wanted one of these, and I said, that's not very cybery, is it, really? A physical book, and it's great that we've got a soft copy. How we should do it, I would tend to, I think Visesh has got an answer here, hasn't he? I would tend to say the cyber market is incredibly innovative, and what they need to do as a market is think about how can we keep the market up to date on how the dynamic changes in cyber risk, which continue to occur, without necessarily going through the full process, which is a process of writing a physical book. So I would throw the challenge back to the audience.
Great. You mentioned Visesh there. Visesh, did you have any comments to add to that?
Yeah, happy to come in. And when you read the book, you'll see that actually what it does is it gives you a really good foundation to understand cyber and to continue to build upon your understanding. And, you know, we keep talking about cover to cover, do you read the book or not? Cyber is a really interesting problem because you can't be an expert in all the areas. All you can get is a good enough understanding so that you can talk to relevant experts in all those areas. And this book is perfect to prime you to be able to do that and to be able to reference back. The market itself will continue debate in all those specialist areas, and I think that is the function of the market.
Great, thank you for that explanation. Quite a few more questions coming in here. I can answer a couple of those. Will the slides be shared afterwards? Yes. There will be slides available. Actually, we're recording this session, so you will be able to watch this on replay. You can also share this with your colleagues who might have missed this for other meetings or for enjoying the sun today. But certainly there will be opportunities to revisit this webinar today as well, and the content within it. Quite a lot of questions here. We're talking about the market environment here. And the poll number 3 there, we asked the question about, do we believe that cyber risk will eventually become uninsurable or unreassurable? And 22% of you thought yes, it will eventually become uninsurable or unreinsurable, and 78% said no. So maybe we could talk a little bit about the market conditions. And you've all got great roles here on the panelists here in the cyber market. So a little bit about maybe the cyber market trends that you're experiencing at the moment. How would you describe the market that you're facing? And we've talked here a little bit about claims, and we've talked a little bit about market conditions. So Peter Hawley in the studio, perhaps I could start with you. What are you seeing as the market trends, and how are they sort of reflected in the book as well? Was the book going to be stale quite quickly?
I don't think it'll be stale. I don't think it's written in such a way that some of the core principles will run out of steam anytime soon. Of course, things move on, things change, claims happen, new zero-day attacks come along, and that is where perhaps occasionally things will begin to date. But at the same time, that's the history, and that's certainly what the market is crying out for all the time, is claims data. So even the older data is still useful to a point, although of course it does fall off a little bit as time goes on. But in terms of what's being seen in the market right now, yeah, there's a huge capacity crunch on the go that we all know about. The losses are beginning to stabilise, but that is primarily through improved risk selection by the underwriters. And I think going forward, the maintaining of that underwriting discipline is going to be absolutely key to making sure the market doesn't go where the 22% are concerned it could go. I understand where that 22% believe it could be, and to be fair, 2-3 years ago, it was like staring into the void a little bit, particularly as I was, until very recently, have been an underwriter. So it is something that has been looked at. I think as a market, though, we have led the way. We have paid the claims. Again, not so long ago, there was a question as to, does a cyber policy ever pay? Well, yes, they do. That's very much been evidenced in the market. And then that has then fed through to saying, okay, we've paid the claims, and now the customers need to get up to the standards that we expect everyone to be at. the broker's been great at articulating that to their clients and making everyone understand where that pain's been felt and where things need to get to make sure, as the world continues to change and cyber risk becomes an ever greater threat at board level, but to every company. And where that can ultimately go is, of course, where the market will find its comfort and push things through. And that will invite more capacity in, which will relieve that pressure point, and then the pricing will get to where it needs to. And then, of course, with the amount of data that's available, companies like CyberCube and Security Scorecard, my shop these days, we're there to help augment and supplement data and provide further comfort to particularly the capital providers that can really begin to ultimately push out the availability of the product and allow the underwriters to have a lot more comfort around writing the risks and providing the covers.
Great, thank you, Peter. Visesh, do you agree with what Peter's saying? And what are your thoughts on that 22% that believe that cyber risk will eventually become uninsurable and unreinsurable?
I think the market will have to rise to the challenges as they continue to pose themselves. It is a struggle to understand ahead of time what events might cause the losses to escalate. I do think that the market hasn't yet had the big events that really cause cyber risk to be taken fully seriously. And we try to get that across in the chapter, but it is very much a watch this space and adapting and surviving.
Great, thank you. Peter, could you provide your reinsurance slant on this? What are you seeing in the cyber market at the moment, and your thoughts on that 22% of it being uninsurable in some people's opinion?
Yeah, sure. So I think it's fair to say, the cyber market is basically still in its infancy, right? So, I mean, people complain about the prices going up, but the fact is at the moment it's a hard market in insurance, a hard market on the reinsurance side. And we're going to expect the product and the associated claims to evolve over time. Perhaps the coverage is too wide at the present time. We just don't know. I mean, can you even use the terms hard market for cyber? Because in fact, the coverage is so new, the peril is so new, that in fact maybe it's not going to have this cycle of having high prices and then more capacity comes in. I think generally speaking, the risk appetite of the reinsurers, of the insurers, it's quite limited. I mean, it's limited because it's just such an unknown, and as Peter said, it's shrouded in mystery. I think at the present time, probably the current challenges are things like the claims inflation, shortage of capacity, as we spoke about, insurance, reinsurance. The reliance on reinsurance is also an issue. If you're basically ceding 50% to the reinsurance market, you've got a shortage of talent, you've got lack of commonality in wordings, risk standards and risk information, and potentially an over-reliance on a pure price change. I think for the 22%, I think if you read this book, I think you will see that it's not something which is uninsurable. It's insurable, but it's quite complex. You need to break it down. You need to think about what losses can happen, which coverage do you offer, and then how do you price that? And then how do you basically learn from your mistakes, right? So I think it's very manageable, but it's not that easy. You need a lot of, as Visesh said, you need a lot of collaboration between different experts. You need the legal part, you need the actuaries, you need the underwriters, and also working together with the brokers and the insurers, everyone together really. That's the answer.
Great, thank you, Peter. We've got a few more minutes left, so some time for some more questions. Another one coming here, and this must be somebody who's working in the marine environment. They're asking the panelists what are the thoughts on a specific dedicated cyber policy against a bolt-on for existing policies. How do we feel the market is moving? Are we moving more towards bolt-ons, moving away from that? What are our thoughts? Peter, can I ask you in the studio if you've got any experience, what you're seeing in terms of what the market trends are?
Yeah, sure. So I'm not a fan of bolt-ons. I prefer the policy to be there to do what it needs to do. I'm not saying that standalone policies for specific parts of cyber risk shouldn't exist either. Sometimes you don't need the all-singing, all-dancing policy, then with extra bits bolted onto that from a cyber perspective. But specific cyber bolt-ons for existing other lines of insurance business tend to be difficult and complicated because of the amount of specifics related often to the instant response element of the product that then doesn't filter through quite so well. And I would say that, again, just bouncing back to an earlier comment around do the policies pay out, pretty much every big news article that we've seen in the last few years about cyber policy doesn't pay out or cyber cover not claimed tends to be linked to an exclusion existing in another line of business, and we know those examples. So I'm not a fan of it because they tend to just sort of get shoehorned in. There is a history of those policies then either causing a huge loss, which causes problems to that particular line of business, but also potentially not being covered. And it takes it away from making sure the customer knows 100% they've definitely got the cover they think they have when the policy incepts.
Visesh and Peter on the call there, do you have any thoughts on bolt-ons there?
I don't actually know.
No, sorry, nothing from me.
Anything else there? Okay, great. Just a couple more things here. The book does, Neil, I'm turning to you now. The book does actually cover sections on policies. Perhaps you can tell me a little bit more about these sort of terms and conditions and things that we talk about in the book and sections of the book.
Yeah, so chapter 4, Matt Ellis is a very good view of going through what a typical cyber policy would cover. Yeah, and not cover. I think we've caught up with the marine caller was probably talking about injury or damage claims. So if a ship sinks because a hacker's hacked into the control systems of the ship, is it a marine hull claim or is it a cyber claim? And that's kind of looked at in a little more detail in chapter 5 when we look at silent cyber, where Celso goes through the different exclusions we'll see on different policies. And once you get away from the cyber policy, then there's tens of policies which may cover a claim caused by a hacker. Particularly an injury or damage claim, so it gets more and more complicated. So we try to look at a bit of the non-cyber element, but I don't know whether the marine caller was on about this, but to me, I'm a broker, so I think one of the great things about writing the book was I got Peter's perspective, which is very different from my perspective sometimes. And if a ship sinks, I want to cover the marine hull policy, regardless of what the cause of that was. And if there's a data breach liability claim, I'll have that covered in a cyber policy. And so if somebody starts saying, no, we're going to take out this sort of cyber bit of the marine policy and cover that damage somewhere else, I don't like that as a broker. And I don't think the market's really figured out quite how to do it yet, from my perspective.
Great. Well, hopefully if they read this book, they'll have a good foundation and learn how to underwrite all these in a changing market. So great book here, fantastic read. It just leaves me to say thank you very much to everybody who's joined us on the call today. So everybody who's listening and asked some fantastic questions. Visesh Gosrani, Neil Park, Neil Wedge, Peter Hawley, thank you so much, everybody, for being in here and helping write, edit, and lead this book. The book is available to order from the Insurance Institute of London website. And it is a very substantial book. It's some 382 pages and is sold as a bundle, which does include both a paper and a PDF copy. So it's easily accessible whether you are working from the office or remotely. It will be available from today, right now, and it's £60 per copy for CII members and £75 for non-members. All the proceeds from sales of this book are ring-fenced and set aside to finance future Insurance Institute of London research studies. Thank you everyone for your time. For CyberCube, I'm Yvette Essen.